the FMCG sector is poised for a rebound, and this is with UBS forecasting a 13% of an earnings growth in FY26. This would be driven by potential income stimulus and significant valuation correction. Let's bring in Somin to tell us more on this.
Well, it's a big note that has come in from UBS side on FMCG sector. Now they are expecting a 13% earnings growth in FY26 for the entire sector after a weak FY25. They're also saying that lower taxes and the upcoming 8th pay commission over the next 3 years is something that could spur a demand revival in many categories and extended earnings growth phase for the entire FMCG sector. They're also saying that the valuations have corrected significantly. In fact, to be specific, nearly 35% since October, and that is also one of the reasons why they have turned more bullish on the FMCG space overall, and they're saying that the sector offers defensiveness in a market that may continue to have a low risk tolerance. Now, when it comes to stock specific action, they're preferring DMart and Trent as income stimulus play given their resilient value retail model. They're also saying that Godrej Consumer and HCL are turnaround stories after 5 years of laggard that we have seen for both these counters, with portfolio issues on improvement going forward. For Colgate and Britannia, they are at an inflection point with earnings growth revival likely from this financial year, and they're seeing that ITC is giving appealing valuations at current prices, and they are least preferring Asian Paints on the back of the disruption cycle and Dabur on the back of the portfolio issues that currently Dabur is facing. A few changes that they have done to their stock recommendations. They have upgraded HUL and ITC to buy. They have upgraded Trent also to buy from a neutral rating. Godrej Consumer continues to remain a buy, while Britannia also remains a buy. Colgate is a double upgrade from to buy from sell, that was the earlier rating, and on the downside they have downgraded Marico's rating to neutral. Asian Paint is a double downgrade to sell from a buy rating. Dabur they have also downgraded it to sell from a neutral rating, and when it comes to Jubilant Food, they have downgraded that stock to sell from buy and have cut the target price to 600 from 615.
Okay, thank you so much for rounding that up for us. FMCG sector in focus. But let's shift focus back to the IT space. HCL Tech, if you are seeing, has witnessed strong buying sentiment. This is heading off into the release of its quarterly earnings today. But what is the key expectations that we are looking from this? We have Puneet standing by. Puneet, talk to us about HCL Tech. What are the key expectations now? What we have seen from the commentary of ITCS and Infosys is on the discretionary spending, on the demand environment. Talk to us what could be the main key parameters that we could see for HCL Tech.
Well, definitely. Thanks for that. So we're expecting just growth of about 1% in terms of revenue. So we are expecting a somber quarter for all the large cap IT peers, and HCL Tech is also one of them. This will lead to an EBIT margin compression of roughly about 116 basis points in this particular quarter, to come in roughly at about 18.3%. Now, because this is a quarter where the company has salary as well as wage hikes, that is the key reason that EBIT will be down, but the revenue growth also hasn't been strong enough to support that. This will lead to a net profit falling by 4% in this particular quarter at roughly about 4,376 crores. Now, apart from that, the product business is expected to have a seasonally weak quarter as well. And Nomura is expecting the net new deal wins essentially to be in the range of $2 to $2.5 billion for something like an HCL Tech. Now, when you look at the constant currency revenue growth, which takes out any kind of discrepancy in currency across geographies, in quarter 3, the company had a 3.8% constant currency revenue growth compared to quarter 2. And generally, quarter 3 is one of the strongest ones for the company. So when you look at the same time last year in Q4, it was just about a 0.3% constant currency revenue growth for HCL Tech. And that is a trend that's similar. So we're expecting constant currency revenue metric also to be lower in this particular quarter. When you look at the net headcount addition as well, that's one of the key aspects that over the last 8 quarters, the company's actually had a negative 1,500 headcount. So essentially, while the attrition has slightly moved up in this particular time frame, from roughly about 16% or 13%, it's actually improved very well over the last 8 quarters, something that we've seen across the IT players. They've not actually added too many people in the last 8 quarters. And then finally, when you look at the guidance for FY26, that's going to be one of the key ones. It's both Nomura as well as Nuvama is expecting a 2 to 5% year-on-year guidance for FY26 in terms of constant currency revenue growth for HCL Tech. And that was similar, that was estimated for Infosys, but Infosys came with a 0 to 3% guidance. So that will be one of the key numbers going forward. Apart from that, if they're seeing any project delays in this quarter, will be something to watch out for. Overall, weak print expected. Press conference today stated at 6 p.m.